Welcome to Market Brief After Hours. We have a truly historic session to unpack today. Wall Street was firing on all cylinders, driven by a massive technology rally and some shifting geopolitical winds. We saw major milestones across the board, so let's get right into the headline numbers.
It was definitely a session for the record books. The momentum we saw today is something investors have been anticipating for weeks, and the breakout finally happened.
And what a breakout it was. The Dow Jones Industrial Average reclaimed that massive psychological barrier, surging 0.75% to close at 50,063. The S&P 500 climbed 0.77%, finishing at a fresh record close of 7,501. And the Nasdaq composite wasn't left behind, rising 0.88% to hit another record high, closing at 26,635.
Those numbers are staggering when you step back and look at the broader economic environment. To see the S&P 500 close above that 7,500 level for the first time really underscores the aggressive rotation we are seeing into large-cap growth and technology stocks.
Let's dig into the catalysts there. Cisco and Nvidia were clearly in the driver's seat today.
Absolutely. Cisco was a massive market mover today, rallying more than 13%. They didn't just beat quarterly expectations, they raised their forward guidance. Interestingly, they also announced plans to cut nearly 4,000 jobs. While job cuts are always tough news, Wall Street tends to reward companies that aggressively focus on efficiency and profitability, and we saw that reflected in the stock price today.
And Nvidia also had a strong day, advancing more than 4%. This seemed tied to some geopolitical developments, right?
Exactly. There were reports indicating that the U.S. has approved the sale of Nvidia's H200 chips to several Chinese firms. That is a huge sigh of relief for the semiconductor sector. It removes a significant layer of regulatory uncertainty and proves that the AI trade still has plenty of runway.
Speaking of the AI trade, we have to talk about Cerebras Systems.
What a debut! Cerebras Systems soared 68% in its Nasdaq debut today. They priced their shares at $185, which was already well above expectations, and finished the day with a market valuation close to $95 billion. It just proves that investor appetite for anything tied to artificial intelligence and semiconductor infrastructure is practically insatiable right now.
Let's cross the Atlantic and look at the European markets, which also had a very solid day. It seems the UK economy delivered quite a surprise.
A very positive surprise. European equities closed broadly higher, with the Stoxx 600 gaining 0.7%. The real story was the UK, though. UK GDP expanded by 0.6% during the first quarter of 2026. That matched forecasts and actually marks the strongest quarterly performance among G7 economies so far this year. On an annual basis, the British economy grew 1.2%, which comfortably beat expectations of 0.7%. Even manufacturing production unexpectedly rose 1.2% in March.
How did the specific country indices perform on the back of that news?
We saw green across the board. Germany's DAX was the outperformer, jumping 1.3% as their own tech shares rallied. Italy's FTSE MIB rose 1.15%. France's CAC 40 gained 0.83%, and the UK's FTSE 100 advanced 0.38%. We also got some good news out of Spain, where the inflation rate eased to 3.2% in April, down from 3.4%, largely helped by lower electricity and fuel costs.
That is a lot of optimism in Europe, but looking at Asia, the market seemed a bit more cautious ahead of the high-stakes summit between Donald Trump and Xi Jinping in Beijing.
Cautious and mixed. Japan's Nikkei 225 fell 0.98%, and the Topix lost 1.03%. But contrast that with South Korea, where the Kospi surged 1.75%, and the Kosdaq advanced 1.2%. Samsung was a standout there, climbing as much as 5% to fresh record highs, which is incredible considering they are facing a potential 18-day labor strike involving over 41,000 workers.
What about China and India?
Hong Kong's Hang Seng traded flat, and China's CSI 300 actually declined 1.68%. Over in India, the Sensex rose 1.06%, and the Nifty 50 gained 1.18%. But there's a red flag there. Wholesale inflation in India accelerated sharply to 8.3% in April, up from 3.88%. That's the highest reading since October 2022.
Inflation is definitely still a global theme, especially with energy prices. oil is holding above $100 right now.
Yes, Brent crude settled at 105.72 per barrel, and West Texas Intermediate closed at 101.17. The geopolitical risk premium is heavily priced in. The White House confirmed that President Trump and President Xi agreed the Strait of Hormuz must remain open to protect global energy flows. Meanwhile, OPEC lowered its 2026 oil demand growth forecast to 1.2 million barrels per day, down from 1.4 million. They also reported that production fell by 1.7 million barrels per day in April. Overall, production has dropped by almost 30% since the Middle East conflict began in late February.
We are going to take a quick break. When we come back, we will dive deep into the Forex markets, look at some crucial moving averages, and discuss what is happening with gold, silver, and crypto. Stay with us. Welcome back to Market Brief After Hours. Let's pivot to the foreign exchange markets. The US dollar had quite an impact today, particularly against the euro and the pound.
It was a highly technical session for currencies. Euro-USD weakened sharply, closing at 1.1669, which is a drop of 0.35%. Sellers really took control here. The pair steadily lost momentum and slipped right beneath the 100-day simple moving average at 1.1707, and then fell through the 200-day SMA at 1.1682. It settled right at the daily low, leaving it only marginally above the 50-day SMA at 1.1647. That 50-day average is now the final layer of nearby technical support.
And the British pound fared even worse, correct?
Much worse. GBP-USD essentially collapsed through a major support cluster. It ended the session at 1.3397, down 0.93%. Sterling faced aggressive selling all day, driving the price straight through the 100-day SMA at 1.3482, the 50-day SMA at 1.3431, and the 200-day SMA at 1.3425. When you see a broad technical breakdown like that, it signals decisively negative momentum.
With both the euro and the pound falling against the dollar, how did the euro-GBP cross perform?
We saw a strong breakout move there. Euro-GBP advanced 0.58% to 0.8710. Because the pound sold off much harder than the euro, this pair broke decisively above all its major averages, the 50-day SMA at 0.8669, the 100-day SMA at 0.8680, and the 200-day SMA at 0.8699. After weeks of being trapped in a sideways range, buyers are clearly trying to establish a new upward trend.
Let's check in on the Japanese yen.
USD JPY climbed 0.33% to 158.37. It found very firm support near the 100-day SMA at 157.37 and recovered strongly. It remains comfortably above the 200-day SMA at 154.40 and is now approaching the 50-day SMA at 158.70. If it can sustain a break above that 50-day average, it could reopen the path to previous highs.
Moving over to precious metals, it wasn't a great day for the bulls.
Not at all. Gold remains under heavy pressure, settling at $4,653, down 0.76%. It is firmly stuck below the 50-day SMA at $4,740 and the 100-day SMA at $4,783. While it is still trading well above the 200-day SMA at $4,316, the inability to reclaim those shorter-term resistance levels shows that the upside momentum from earlier this year is fading.
And silver took an even steeper dive.
Silver tumbled 4.57% to close at $83.46. It was a sharp, aggressive reversal from recent highs around the $88 mark. Despite erasing a massive portion of its recent advance in just one session, it is technically still holding above the 50-day SMA at $77.09 and the 100-day SMA at $80.85. So the longer-term structure is intact, but the bullish momentum has definitely hit a brick wall.
Let's touch on the crypto space. Bitcoin briefly made some headlines today.
Yes, Bitcoin briefly cleared $82,000 before easing back toward the $81,400 region. The big catalyst here was regulatory news. The U.S. Senate Banking Committee advanced the Digital Asset Market Clarity Act in a 15-9 vote. This moves the U.S. closer to a clear federal framework for digital assets. On the back of that news, crypto-adjacent stocks like Coinbase, Robinhood, and MicroStrategy each gained around 5%.
Before we wrap up, we should look at a few other market movers and some domestic economic data. Doximity and Boeing had a rough day.
Doximity took a massive hit, slumping more than 23%. They forecasted their fiscal 2027 revenue well below analyst estimates, which sparked fears that growth on their digital healthcare platform is slowing down. Boeing also dropped more than 4%. Reports came out that China agreed to purchase 200 aircraft, but investors were expecting a significantly larger deal, so the stock sold off on the disappointment.
Finally, let's look at the U.S. labor market and Treasury yields. We had some inflation-related data drop today.
Treasury yields held steady despite some hot data. The 10-year yield edged up to 4.481%, the 2-year climbed above 4%, and the 30-year slipped slightly to 5.028%. The hot data came from import and export prices. U.S. import prices surged 1.9% in April, crushing expectations of a 0.9% rise. A lot of that was driven by petroleum import costs, which jumped 19% due to those high crude prices we discussed earlier. Export prices also rose 3.3%, the strongest increase since March 2022.
Did that impact the employment picture at all? And what was that impact?
Initial jobless claims did edge higher, increasing by 12,000 to 211,000, which was slightly above the expected 205,000. Continuing claims rose modestly to 1.78 million. But overall, the labor market remains stable, especially following last week's strong non-farm payrolls report showing 115,000 jobs added in April. The big question going forward is whether these rising trade and energy costs will eventually weigh on employment and broader inflation expectations.
That is the perfect place to leave it for today. A lot to digest, from historic index highs to complex currency shifts. If you find this useful, please follow Market Brief after hours.